What if your money could earn money, even while you're sleeping? Most people spend their entire lives working for money. They trade hours for dollars, hoping that one day they'll finally have enough to relax. But wealthy people often play a different game. They learn how to make money work for them, and here's the good news: you don't need to be rich to start. In this video, I'll show you 10 practical ways to let money work for you, whether you're a complete beginner, an experienced investor, a retiree looking for extra income, or a young adult trying to build wealth early. And make sure you stay until the end, because the final strategy is one of the simplest yet most powerful ways to build long-term wealth, and many people completely ignore it. Let's get started. 1. Invest in index funds. One of the easiest ways to let money work for you is through index fund investing. An index fund is a collection of many stocks bundled together into one investment. Instead of trying to pick the next Apple or Amazon, you're investing in the overall market. Historically, broad market indexes like the S&P 500 have delivered strong long-term returns. Here's why many investors love index funds. They're diversified. They usually have low fees. They require very little maintenance. You don't need to monitor the market every day. You simply invest consistently and allow time and compound growth to do the heavy lifting. 2. Harness the power of compounding. Albert Einstein reportedly called compound interest the eighth wonder of the world. Whether he actually said it or not, the principle remains powerful. Compounding happens when your investment earnings begin generating earnings of their own. Imagine investing $300 every month. Over time, your returns generate additional returns. The longer your money stays invested, the more powerful this effect becomes. The biggest advantage isn't necessarily investing huge amounts. It's starting early and staying consistent. Time is one of the greatest assets an investor has. 3. Build multiple streams of income. Relying on one source of income can be risky. If that income disappears, your financial stability can disappear with it. That's why many financially successful people create additional income streams. Examples include dividend investments, rental properties, online businesses, freelance work, royalties from digital products. The goal isn't to work yourself to exhaustion. The goal is gradually creating income sources that don't depend entirely on your daily labor. More streams can mean greater financial resilience. 4. Invest in dividend-paying assets. Dividend investing focuses on companies that regularly share a portion of their profits with shareholders. When you own dividend-paying investments, you may receive periodic cash payments. Some investors use this income to supplement their lifestyle. Others reinvest those dividends to buy additional shares. Over time, reinvesting dividends can significantly accelerate portfolio growth. However, remember this: a high dividend yield alone doesn't automatically make an investment attractive. Always consider the company's financial health and long-term prospects. 5. Eliminate high-interest debt. Sometimes, the best investment you can make is paying off expensive debt. Credit card debt, for example, often carries very high interest rates. If you're paying 20% interest on debt, earning 7% on investments won't necessarily move you forward financially. Reducing high-interest debt improves cash flow and frees up money for future investing opportunities. Think of it this way: every dollar you no longer lose to excessive interest becomes a dollar that can start working for you instead. 6. Invest in your skills. One of the highest return investments isn't found in the stock market. It's found in yourself. Learning valuable skills can increase your earning potential for decades. Examples include financial literacy, negotiation, communication, sales, technology skills, leadership abilities. A higher income creates more opportunities to save and invest. Your knowledge can become an asset that no market downturn can completely erase. 7. Automate your investments. Many people fail financially not because they lack knowledge, but because they lack consistency. Automation solves that problem. Set up automatic transfers into investment accounts. Invest before you're tempted to spend. This approach removes emotions from the process. You don't have to decide every month whether you'll invest. The system does it for you. Consistency often beats perfection. 8. Consider real estate investing. Real estate has long been a popular wealth-building strategy. Potential benefits include rental income, property appreciation, portfolio diversification. Of course, real estate isn't passive in every situation. There are costs, responsibilities, and risks involved. For those who don't want to manage properties directly, alternatives such as real estate investment trusts may offer exposure to the real estate market. The key is understanding what aligns with your goals and risk tolerance. 9. Keep an emergency fund. This may not sound exciting, but it's incredibly important. Unexpected expenses happen. Medical emergencies. Job losses. Major repairs. Without an emergency fund, many people are forced to sell investments at the worst possible times. An emergency fund provides flexibility and financial security. It helps protect the wealth you're working so hard to build. Sometimes, defense is just as important as offense. 10. Think long-term. This final strategy may be the most important. Successful investing often requires patience. Markets rise. Markets fall. Headlines create fear. Trends come and go. But long-term investors understand that building wealth is usually a marathon, not a sprint. Trying to constantly predict short-term market movements can lead to emotional decisions. Instead, focus on consistent investing, diversification, regular reviews, staying committed to your plan. Time in the market has historically rewarded disciplined investors. The people who often succeed aren't necessarily the smartest. They're the ones who remain patient. Let's quickly recap the 10 ways to let money work for you. 1. Invest in index funds. 2. Harness the power of compounding. 3. Build multiple streams of income. 4. Invest in dividend-paying assets. 5. Eliminate high-interest debt. 6. Invest in your skills. 7. Automate your investments. 8. Consider real estate investing. 9. Maintain an emergency fund. 10. Think long-term. You don't need to implement all 10 strategies overnight. Even choosing one or two can put you on a stronger financial path. Remember, financial freedom isn't usually built through luck. It's built through consistent decisions repeated over time. If you found this video helpful, subscribe to the channel for more practical financial education designed to help you make smarter money decisions. And I'd love to hear from you. Which of these 10 strategies are you already using? And which one do you plan to start next? Leave your answer in the comments below. Also, if you know someone who works hard for money but wants to learn how to make money work for them, share this video with them. Thanks for watching, and I'll see you in the next video.